This is great because we're going to pull the curtain back a little bit on those non-transparent things that we don't see every day on our tickers on the bottom of our screen.
Absolutely.
What exactly is a private investment platform, and how exactly is it utilized by investment advisors and investment professionals like Opto?
So private markets are, as varied in many ways as the public side. And so for every public equity, there's probably a private equity, perhaps even more. The private credit space growing a ton in the last decade. And then obviously things that we think of as traditionally private, like real estate. The issue is there's a lot of stuff. And unlike public markets, as you noted, you don't have tickers, data. How do you find what's out there and what's worth investing in? And so having a platform that both curates that and then allows for access, because just because you know about a fund doesn't mean you know how to get in.
All right, let's talk about the access factor, because that's always been the sticking point for private markets. It has always been that quote-unquote accredited investor, the ones who are either very wealthy or make a lot of money or some combination of both. Is that still a hurdle for people to get into private investments, even with access to platforms like yours?
It is still a hurdle, and it's also a key consideration. Private markets are by nature illiquid, and that can vary from a 3-year lockup to 10, 12 plus years. And so investors really need to consider, do I have that sort of timeline? Is there a chance that I need this money in the next 2 years, 5 years? Do I want to buy a house? If that's the case, you probably don't want to lock up for that long. And so what we tend to see is people start to exceed that accredited investor threshold. The answer to that question starts to become, yes, there is a portion of my wealth that I can lock up. Below that, depending on your situation, it might make sense, but we would urge caution in thinking about some of these new entrants to the market that make that illiquid side more liquid. That comes with risks.
All right, so I remember I was at the Future Proof conference earlier this year, and I did a panel on private investments. We talked about things like real estate, that's more traditional, but also private credit came up. Where exactly, and you mentioned it just now, what are the hottest parts? Where are you seeing the most demand for that private type of investment?
And so I would separate sort of demand and our interests, where we see markets going right now. There's been a ton of capital in the last 2 years flowing into the largest loans to large companies. That tends to be unsecured, tends to not be particularly investor-friendly in terms of the protections of the lender. And that's for logical reasons. So much capital is flowing into these semi-liquid products, like BDCs, business development corporations. They have to put that capital to work. You only have so many hours in a day, so you focus on big loans. Everyone's focusing on the same big loans. And so, the normal things happen with concentration. And so, ton of capital, ton of effort, ton of marketing in that area. Where we're really excited is places that are underserved by both banks and those large lenders. And so loans sub $100 million to companies that have traditionally struggled to get normal bank financing.